Good morning. I'm Jenny Ray LaRue. I am one of the co-hosts here at Market Outsiders, and I'm here this morning with Namaan Mian. Namaan, good morning. How are
Good
you? I know you're
morning.
ready to go.
I'm ready to go. Happy Friday.
Thank you. You too. Is it Friday? Good to know. How many cups of coffee have you had today so far, Namaan?
I've had zero, so I cannot be responsible for anything I say for the rest of this podcast.
Like my only rule is I don't do math before 9, but coffee is allowed. However, I'm naturally caffeinated, as my husband says, so there's no coffee for me either. So this is a zero coffee morning. Y'all are duly warned. Today we're going to kind of talk a little bit about some big news stories that are happening, and I think that one of the ones that we're going to talk about today, we would probably talk about whether they were in the news or not. We're going to talk about Amex, and Amex earnings came out, so we're going to talk a little bit about what is happening with Amex. We've been talking recently about how the market is often evaluating whether companies beat expectations, but not whether they are great companies, growing companies, or whether they're improving their business metrics. So we're going to look at Amex through all of those lenses, not just the stock price news, but also what's actually happening in the fundamental business. We're going to talk about one of Naman's favorite things, which is credit card signups and lounges. And so we're going to talk about perks and also just consumer behavior around the credit card market. And then we're going to talk a little bit about what's next for some of the card brands. So we're doing this today not from a private perspective, not a here's what card you should have and here's why. We're doing it from a why are these businesses great businesses? So, Iman, just a little bit of preface from me. I'll let you dive in and then I'll pull up the article. I am no, I'm late to the party on credit cards as businesses. I understood them from a consumer perspective and never dove in for such a long time. It actually took me until my mid 30s when I was in business school, sitting in a conversation where one of the guys who had been hired by Buffett to lead an insurance business at Berkshire Hathaway was talking about how actually pre Berkshire, one of the things that he had done was take the premiums at insurance companies and invest them. And one of the major investments that he had made was in credit card companies as they were kind of initially breaking up and demonopolizing. But he talked a lot about how they were some of the world's best businesses. They have almost no cost. Their major cost is customer acquisition, but in terms of the infrastructure that they outlay, the technology that they develop, these are very, very low cost to operate and very like they operate more like tech businesses really than financial services businesses. And it was like this moment that it dawned on me. But he talked about margin expansion, consumer growth, about the opportunity of capturing cash payments onto credit, and it was kind of like the veil was torn, right? All of a sudden, I began to understand that these weren't just, card offers that were a part of everyday life for business and leisure travelers, but they were actually an entire, like, massive business mechanism behind them. So that's a little bit about my wake up story. Naman, you want to give any preface to the chat about Amex today before we dive into the numbers?
Well, we should just quickly preview how credit card companies make money. So we've done deep dive episodes on this. Again, we'll link to that in the description. But let's just quickly preview how exactly they're making money off you and I, the consumer, and off of the merchants as well. So, really, three main ways I want to call out that credit card companies make money. Number one, it's called an interchange fee. So this is the fee that the merchant pays for, the right to give Amex the right to process the transaction. So the merchant wants your money, you decide to pay with a credit card, they have to pay Amex or Visa or MasterCard or Discover a fee that's called an interchange fee. So that's one way that these credit card companies make money. Uh, the second way that these companies make money is called it's just on the interest that consumers pay. So they carry a balance, they don't pay off their balance in full every month, and so they make money off of the interest. And then the third way that companies make money is on top of an interchange fee, they often also charge a swipe fee. And so, really, what you're seeing is that for every transaction that you as a consumer make with a certain credit card, whoever your card provider is, they are generating a percentage of that transaction in fees. And so, even if you are a borrower or a consumer who never actually carries a balance from month to month, they're making money off of the number of transactions and the volume of spend that you are undertaking in a particular month. And so the incentive for these companies isn't just to get you to carry a balance, it's also to get you to use their card more and more because there's an incremental revenue bump every time you decide to pull their card out of your wallet and not another one. So there are more ways that credit card companies make money, but I just wanted to very quickly preview just what's happening because I think that'll illuminate this American Express discussion.
That's good. No, I think there's one other one that you didn't mention, but it maybe have been nested under one of those things. But the fees, the annual fees, are the other big piece
Totally. Totally.
of the pie, right? And so, but one of the things that you mentioned that I wanted to just double down on because you're going to see that right here in the Amex conversation, and would be the first day that I'd want to know is that somehow these credit card companies have been able to make magic. And when I say that, what I mean is that it costs them no more to process a $20,000 transaction than it does a $4 transaction. But they have managed to convince merchants that they should get a percentage, not a flat rate of each
Flat
one of
rate.
those fees, which is exactly the opposite of how ACH works, which is a very like nominal, a percentage, but it doesn't cost Amex anymore to process a swipe that it has a larger number attached to it. And so what they're doing is that they're passing on some of the risk management side of their business. When
I
I
was going to say
swipe a
that's the incremental
$20,000,
cost.
but it's not a direct cost from an actual like credit card processing perspective. And so if they're able to, Amex in many cases is a 3.5% fee for actually somebody running an Amex. That actual fee on a very large purchase becomes pretty substantial. And so we're going to talk a little bit about Amex. We've already gone into detail on their strategy on other pods, but here I think this is really going to highlight, what's going on with that. So if it's good with you, Naman, I'll pull up some
Yeah.
news about Amex. Yeah, cool. So let's see here. I think I'm going to start with Reuters news. I kind of like the way that they presented this morning. I actually did enough kind of overlay of a couple of different ones this morning. So this is kind of a cool highlight. So here's the headline: Amex exceeds profit expectations on robust spending. Okay. So what does that mean? It means that there were a lot of customers spending, right? But more importantly, because of what we just described, it means that even if fewer customers were spending, the overall pie of what was spent, the total tally on tickets that you were spending was higher in this quarter than it was expected to be. Now, as we've talked about in this week's episodes earlier, we actually talked specifically about PepsiCo yesterday. It doesn't just beating expectations doesn't mean you're in a great position or in growth. So one of the first questions that you want to ask is not, did they beat expectations because the expectations were low or dampened because of macroeconomic challenges or news, or did they beat expectations because this is a thriving, growing business that is kind of up and to the right every quarter? So anyhow, here's just a little bit of the kind of underlying info, right? They surpassed street estimates for second quarter profit fueled by resilient spending from its affluent cardholders. If you don't understand how Amex's business works, you might think that they simply were cost cutting. This is a business that doesn't wake up in the morning thinking about how to cut costs. So revenue is going to be the primary driver of whether these numbers are up or not. They do think on the macro about how to manage costs, but they don't think on the micro in a quarter to quarter basis. Oh, we've got to be a little leaner on our costs. We might want to pull back on marketing. That's not how this business operates and how they wake up and think. But I think this is kind of what I want to talk about today, Naman, which is the underlying focus. I remember being in early conversations around credit cards and targeting, thinking about Capital One's strategy. And I thought it was super interesting because Capital One was kind of, even before Amex was large, took a strategy like this, but they kind of ended up taking a left turn into a little bit of a different direction at one point. But Capital One's business was birthed when a couple of consultants were doing some work for a financial services company, and they recognized that the best customers that you could have for a credit card company were people who held balances but didn't default on them, right? So they held balances, which meant that you got the trifecta of earnings from them. You got the interest and the fees and the swipes. but you also were not likely to have that high risk default. And so they kind of held that middle market customer super dear. And that's a lot of the way that Capital One has built and differentiated its business. It hasn't been known as a business card, and it hasn't been known as a high end or a premium card. Amex has had a different strategy. And I think that what we're seeing here is that this strategy, not only in general, but actually specifically right now, is paying off. Naman, want to weigh in?
Yeah, absolutely. I mean, American Express's value proposition has always been for the affluent and wealthy consumer. And it's always been a signal too, if you have an Amex in your wallet, that you're of a certain income level. At least it used to be. And so we've talked about on this podcast before that 50% of US consumer spending is driven by the top 10% of income earners in this country. And so American Express caters to that cohort. So it's no surprise that the transaction volume and the transaction spend through Amex is up because they're catering to just a segment of the economy that is doing very well, and hasn't been hit by some of the economic uncertainty and by some of the drop in consumer sentiment that we're seeing other segments of consumers being hit by. And so this article makes the point later on, and I think it's a good one, that just looking at Amex's earnings in a vacuum is not representative of the broader economy. But I would
Yeah.
say that, like, when you're doing macro analysis on kind of like US consumer spending, it's the most important slice of the consumer because this small cohort is driving an outsized portion of US consumer spending. And as we all know, US consumer spending is 70% of US GDP. So really 10% of people in this country are driving a plurality of US GDP. So this is an important kind of window into their psyche and their behavior, but it's not representative of what's happening across the economy.
Yeah, that's good, Naman. I think that one of the other things that's important to note here is that that really signals for me the time that you actually get worried. A lot of people are looking for things to worry about. So they are concerned about rising prices, inflation, et cetera. These are things, by the way, that we have to manage and that are important macroeconomically, and they're important to a lot of people. But like Naman said, I worry at a different threshold. I worry when this consumer goes away, when they stop spending, when they spend less, or when their credit risk increases. And there was actually one really interesting piece in here because keeping people spending was actually one of the things that I evaluated in a speech writing class on George W. Bush's post 9/11 speeches. I don't know if you've ever done this, Iman, but if you go back and you see the post 9/11 speeches, he mentioned shopping something like 40 times inside the speeches, right? Women are going shopping with their neighbors. They're going shopping at the mall. They're shopping for groceries. Like he's feeding this idea that shopping is what will happen because post 9/11, a lot of people pulled back out of fear, just consumer spending in general. It wasn't rational, but neither was anything that was happening in that period. But it was very, very deeply concerning. And so when we look at businesses, when we look at Home Depot and Lowe's, if Lowe's is like, hey, so we're running a little bit rough right now, that doesn't necessarily mean the economy is going down. In the same way, like for me, the economy is going down if Amex spenders are not spending money, if they're spending less frequently, or if there are fewer Amex spenders, right? If people are kind of like, oh, I can't afford those Amex fees anymore. Those are real hallmarks to me of a weaker economy. And we're not there at all, right? So just kind of going along the trends of where our economy actually is, how diversified it actually is, how resilient it actually is. We're there right now. And you can see that in
And,
these numbers.
and one of the things I want to dig into, if we were going to pull up Amex's earnings report, and I don't know if they even split it out like this, but I'd want to see spend by category. So I wouldn't just want to know, okay, how's Amex running its business, but where are consumers concentrating this spending? Because if this cohort of consumers continues to spend on travel, well, now that gives me an insight into how I think Delta, United, and American Airlines might perform. And so I'm able to pick up kind of hints and bits and pieces about other industries and other businesses from examining not just American Express, but what Chase and what Citi, what Visa, what MasterCard, et cetera, say about their consumers as well. And so I don't know if this article gets into that, but that would be one of my next questions.
I like that, Naman. I want to actually layer on one of mine. One of
Yeah.
my questions was in terms of the spread between different companies, and we may have even looked at this in detail. It's just been a little bit. I don't remember the exact numbers. I would suspect that Amex makes more on its card fees than it does on its interest as a share of the revenue pie. And
I
so
think
if
it's a
you look
safe
down here,
hypothesis.
right? I mean, it may be wrong. It could be that there are a lot of people who want to flex and they're, still over borrowing. And therefore, because the rates on Amex are higher for interest, they're actually doing just fine in that area. And they are making interest. I'm not saying that everybody is here, but this article is trying to make a tie between things that are not going to be impactful for Amex customers, right? They're saying high borrowing costs. If I'm not holding a huge balance, that doesn't bother me actually. Trade policy uncertainty. Like, if you're shopping at Target and your pillow got a little bit more expensive, like that doesn't bother this consumer for Amex. And a job market where companies are increasingly cautious about hiring. Sure, like I may be increasingly cautious about hiring at the lower, the middle levels, but I'm still hiring senior people. I'm still, that there are certainly places where you would see this, but again, like you'd have to look across the whole economy, not just at job growth, but at job growth by sector. And we're seeing in consulting, which is an industry that we track, where we have a ton of private data on it, we're seeing rampant hiring actually in that sector. And so those kinds of folks that are the ones that are holding Amex cards are just not affected by some of these larger macroeconomic trends that we're seeing right now. Did you buy Amex on the dip, Naman? That's what I want to know.
I did not. I should have though. I did buy at the dip, but not Amex. So I'm pretty happy with what's happened over the last 2 to 3 months. I'll say this. I heard something crazy yesterday. This is a total aside, but the recovery from the April lows to now has been like higher and more pronounced than what we saw like post COVID in 2020. Like if you look on a percentage basis, like how quickly we've come back to all-time highs, like this is a faster and like more resilient recovery than we saw even in 2020. I have no insight to share based on that knowledge. It's just something I heard yesterday and it just really surprised me. And I had to go check it out. And I was like, that's actually true. And so you take what you will from that in terms of like insights about the market or what investors are thinking or feeling. I just thought that was an interesting anecdote that I would not have thought was true.
Well, this stock chart is too small to really get a sense of what's happening with Amex. But one of the things that I want to point out is that what's happening here is the exact opposite of what we saw with PepsiCo yesterday, right? Which is that the total revenue rose 9%. This is not a business in peril. This is a business that is growing really rapidly, actually. For the maturity of this business, and 9% revenue growth is pretty phenomenal. And that's not revenue beating expectations. It did also beat expectations, up about $200 million from the 17.7 target to what the actual performance was, to 17.9. And so overall, this business is thriving. This is a thriving business. And so, Naman, I want to spend a lot of the rest of the conversation talking about maybe why. Like, what are we seeing? What are some of the ways that Amex is managing this? I don't know if you've gotten an Amex offer recently or if you have one in your wallet. We should talk about this. But the New York based company boosted its provisions for credit losses. This is the thing that I was talking about earlier, right? Because, like, the one thing that is the red flag of what may be a future challenge for this business is whether or not people are less credit worthy than they were when
Mhm.
maybe they signed up for the card. And therefore, they're running balances that may be never paid off. And so the provision for credit losses did increase versus last year. And so I think that is macroeconomically appropriate. But also, I don't, that scale of what's happening inside the business is small compared to
It's
what
very
we
small.
see on the revenue side.
Mhm.
Yeah.
Yeah, but that's one metric that if you follow kind of financial services or the credit card industry, one of the things you'll track is the delinquency rate. And if you look industry wide, the delinquency rate is still very, very low, even compared to pre-COVID benchmarks. And so it's
But
not
it's
just the
up.
MX.
Remember all the news, Naman? The delinquency rate is up. The economy is tanking, and it's kind of like relative to where any threshold of concern, we're not there.
We're not there.
Right, that's like another example of how you could make data say whatever you want it to if you don't actually
100%.
understand what's happening.
100%. So I think it's noteworthy that they're increasing their provisions for credit losses. I think they have the margin to be able to do that. So I see that as like better safe than sorry. But you're right. It's not something that I think they're concerned about. It's not something I'm concerned about. You mentioned something interesting earlier, just around you think they make more money from their interchange fees than they do from kind of interest that they're charging consumers. I would say that's probably one of the reasons the interchange fee that Amex charges merchants is higher than what Visa and Mastercard charge, is because they're not monetizing the consumer from the interest fee side as much. And they're telling merchants you've got to pay to play if you want access to our wealthy consumers. And so it's a really interesting business model that obviously has worked very well.
Yep. It's interesting. I'm now a merchant with our winery, and we've just chosen a very simple interchange. We use Square there because of broader questions. But a lot of merchants would kind of request for a season that you don't use your Amex card. We would exactly think the way that you're talking about now. If you come in with an Amex, we want you as a customer. We want you to sign up, and we're happy for you to use your Amex when you do it because it's a flex that means something to the durability of our business. And wine is fundamentally a subscription business. And so you actually want customers that aren't going to kind of run out of that $100 that they were going to spend on you the next time that charge comes around, right? So you want to have the customers in your mix that are less likely to default or to charge back. I would imagine that if you looked at chargeback rates, you're going to see lower rates amongst Amex than you would amongst other players, right?
Absolutely. Absolutely.
Noah, can you talk a little bit about this? So let's make this personal. First of all, do you have an Amex? Second of all, there is word on the street that Amex will roll out updates to its platinum cards later this year. I'm just curious if you have a premium card in your wallet. If so, is it Amex? Let's make this personal. I'll pull out mine if you pull out yours.
Yeah. Feels like we're back on the playground. It's like I'll show you mine if you show me yours. Um, I've been a loyal Chase customer for many, many years. And so when I was going through kind of my premium credit card, decision making process, it was Chase versus Amex. And just for my categories of spend, the travel partners that I cared about being able to transfer points to, there's all this like criteria that I had. Chase just won out for me over Amex. I will say though that's probably shifting with the refresh that Chase has done to its Sapphire Reserve card. It feels like to me it's becoming more like a coupon book versus like a
When you
premium
say
travel card.
refresh, can you just like talk about what that actually should be
So I mean,
called?
it means stripping out real value and adding value that's more difficult for people to realize. But because like the maximum dollar amount of that value is higher, you make it seem like this is a better deal for the consumer. And maybe it is for some, right? Like it used to be a travel card, which is really, a big part of our lifestyle is travel, both work and personal. And so the perks initially were really geared towards travelers. And now it seems like they're more geared towards affluent suburbanites or affluent like urbanites, meaning like, hey, you get a $10 a month like DoorDash credit for groceries, and you get this dollar a month credit for Netflix. And it's like, well, that's great, but those aren't travel perks. And so the way that I actually leveraged the card was for travel perks. And so I'm really interested to see how American Express updates its platinum cards later this year. If they keep that platinum card as a pure travel card, I'll be switching. If they kind of continue to follow this coupon book model, then I think there's space in the market for like a true premium travel card. You see here, Citigroup is launching a new premium credit card. I'm like the competition in the space is intensifying because everybody sees what we've talked about today. This is the consumer you want to go after, and the big risk for these companies is churn. And so as you see competition intensify, they have to protect against that churn. And so I'm hoping that that means better benefits, annual fees that aren't exploding in terms of how much they're charging you every year, and features that are actually usable.
One thing that I think is super fascinating when we talk about this is just my personal experience. So you didn't actually show the card. I'm going to do mine here. This is a game that I need to teach you how to play, apparently. But anyhow, so I've got a Delta Amex. This was my first like business credit card, right? So I got when I was at Bain, one of the first things that you do is that you ask for luggage recommendations if you want to look like a player, right? And you ask for credit card recommendations because nobody wants to pull out like the wrong credit card at a dinner and be like, oh, that's interesting what you chose there. So it was really interesting. The way that we did that was not through a psychological flex. It was actually just like through a spreadsheet, right? Here are the benefits of each one of the cards that you're thinking about. And the only two that were in play were the Chase Sapphire Reserve and the Amex, and specifically like not an agnostic Amex because I worked in Atlanta, so it should have been a Delta Amex because there are increased benefits if you have enough spend in a specific category to go with one of the branded cards. And so, anyhow, like a respectable first year analyst, got my first fee paying card. So I was 7 years into my credit card journey at that point. I'd only had zero fee cards up until that point because I never had more than probably $1,000 to $2,000 of spend a month. Well, all of a sudden, I actually spent money and then got it reimbursed by the company. So I was able to rack up a lot of points when I was buying, last minute, first class, big hotel dinners, car rentals, right? All of these kind of pieces of the picture. But I spent $95 a year on that fee. It was only when I actually bought my own business and I had even more things that were a part of my expense profile that I moved up to the Delta Reserve card. But at the same time, I actually outspent the Delta Reserve card thresholds. So at some point, it became unreasonable for me to keep only a Delta Reserve card. And I needed to have, and I always had a Visa and Amex in my, a Visa or MasterCard in my wallet. For me, it was Visa because when I traveled internationally, I wasn't guaranteed for the reasons we talked about earlier that merchants would accept my American Express. But anyhow, just kind of as a part of this personal journey, I adopted the Chase Sapphire Reserve. I had it for around 5 years. I actually rarely used it, but I did use a number of the benefits. And maybe I was the kind of customer that Chase was trying to get rid of, but it's the only credit card I've ever canceled in my entire spending journey. And so I'm really interested to see how some of these card refreshes just when I think about it at a micro level, you can't ever extrapolate your personal experience
Yeah.
to the macro in terms of where the insights are, but it can definitely lead you to questions, right? My questions are, is the Chase Sapphire Reserve churn rate higher now that they've restricted a lot of that benefit and use? They've also increased the credit card fee. I have to generally assume that they're smarter than I am, but really like paying attention to the resilience of the business in some of those ways might lead you to say, I actually want to work for one of these companies. I actually want to invest in one of these companies because understanding the mechanics of how they make those decisions and why they are often the right decisions, even if they aren't intuitive for you, I think is really helpful. So anyhow, that's a little bit of my history. You didn't bring a credit card to the gunfight, huh, Naman?
I wasn't told I had to bring my wallet to this podcast episode. So,
This is the exact moment when we should be like, there's some way that you should
everything's Apple
subscribe.
Pay now.
I know. Hey, you're welcome. Okay. Worked on that technology in 2008.
Mhm.
Everybody's finally catching up. Hey, the last thing that I think we should just talk about here is some other news. I don't know if you've seen this, but Amex is launching a new style of airport lounge. So we talked a little bit in the Amex episode about lounges and lounge access. I've had this Amex card for most of my professional career and literally never used an Amex lounge. I use a Delta lounge. But largely it's because of guests. Like when I'm traveling on Delta, I'm often traveling with other people. Delta actually doesn't even service my home airport now, but I still have achieved a million miles on them and I try to fly them when I can. But like, I just want to get your thought about this. Why are they doing this? Right? We talked a little bit about the cost side. They're pretty low cost. Lounges are a
Mhm.
cost function for Amex. What is it that they're doing here from the business side to really serve the customer retention, the
Yeah.
spend of the customer and customer adoption for this card?
Yeah. I think the primary metric here is to limit churn. So what you've been seeing across the American Express lounge network is overcrowding and long lines. I was just at JFK a few days ago, and the Amex Centurion Lounge and the Chase Sapphire Lounge are right next to each other, and each of them had a 30 to 40 minute wait. I actually had to wait in line to get on the wait list. for the Chase Lounge. It was just ridiculous, right? And you're standing there and you can't help but think like, this is what I'm paying this exorbitant annual fee for, like for the
Like
right to like,
$700, right?
yeah,
Yeah,
for the
exactly.
right to stand in like this like, holding area to maybe get in before my flight. And so I think what they're really doing is they're trying to distribute demand across different lounge models so that whether you are at an airport for 3 hours before your flight or you're there 60 minutes before your flight, you feel like there's a perk or a benefit that you got to take advantage of. And you don't have this thought, why am I paying $700 a year to keep this card in my wallet? So I think the ultimate metric is limiting churn. And then the secondary benefit would be maybe there's like some new customer acquisition that is driven by this kind of concept. But I think this is more about keeping the people you already have.
What I think is interesting is that I was kind of doing some math. One of my rules is no math before nine. So everybody, disclaimer has been launched here. But it'll be open to customers from 90 minutes before their flight departs. Initially, when I heard that, I was like, oh, like an hour and a half usage. That's actually pretty
But
reasonable.
it's really
And
like
then I
45 minutes.
it is, right? Well, it's probably even less than that unless your gate is right outside, because if boarding starts at 45 minutes, the customers that are on Amex are going to be in the early tiers, so they're going to be boarding first. And so they're going to want to leave 50 to 60 minutes before to get to the gate and be right there at the front of the line. And so this is like a 30 to 45-minute value proposition. So what they're doing here is they're also trying to manage table turns, right? They're trying to
Yeah.
make sure that you're coming in, you're getting what you want, and then you're not sitting there holding other customers from the benefit. These are naturally going to become higher cost, I think, with that kind of turn, because if you have somebody come in and they eat a little bit of food and they stay for an hour and they take up one of the spaces, then you're actually not spending as much on that person. But that's why I was saying, I think you have to recognize that sometimes you actually want that. You want a higher cost model for a different purpose. And so, because cost is not the way that Amex thinks about managing, they think about managing to the top line. There's got to be a top
Mhm.
line tie here.
Well, and for me, this would be really attractive to me. Like I hate getting to the airport earlier than I have to. So, usually my goal is I rock up, 30 minutes before boarding, you make it through security. By the time you're through security and you walk to your gate, like boarding started. Like that's the ideal. And so, if you've got a little bit of margin there and I could pop in here for 20 minutes and grab a drink and a bite and then walk onto the plane, like I think my kind of customer, like the person who travels like me, is who's this is really catered to. And if Chase doesn't have an offering like this in their network and MX does, like I would, this would cause me to think about switching.
Well, also, I think this is pretty interesting. So they're launching it at the airport in Las Vegas. They, one of my first questions was, do they also have a Centurion Lounge? Is this kind of a differentiated product that you put in different airports versus where Centurion lounges are? And also, they said it could help ease crowding and manage demand across lounge spaces. So there were just a couple things I kind of read down here that I thought were interesting to highlight. It will complement the main Centurion lounge. So there is another lounge. This is a secondary lounge. It will be complimentary for members who have access to the network. It's a speakeasy inspired space. Literally, I've heard that word like 100 times in restaurants.
It's
I
very
have a
trendy
friend
right
in
now.
Texas who's building a speakeasy. You and I went to a speakeasy like 2 months ago, right? But right, not only does it sound like the function of actually being a short pit stop is great. But my first question was, is it grab and go? Like, because that's what you're actually seeing in United lounges. It's not.
Mhm.
It's actually the other direction, right? It's gourmet small plates and signature cocktails. So it's served. It's small plates served quickly, but it's not really a grab and go model or a lower end model. So I think that's pretty interesting. Also, honestly, like I feel like we should go. Not like I have a lot of reasons to fly through Las Vegas, but maybe we should make one, because look at some of these chefs, right? And that's exactly what they're looking for. They're looking for that kind of chatter, those kinds of decisions. The build out here as a test. You have this is, I think, also catered maybe more to a little bit of a leisure traveler. I'm not sure what you think about that.
I think so too. I mean, if you are anytime you're piloting something in Las Vegas, that just gives me insight into who your customer is, and it's the leisure traveler, and so I think that's probably where they're seeing a lot of the complaints in terms of lounge overcrowding. Because if you're a business traveler, you either like have a premium ticket through your airline that gets you access to the airline lounge. You have the benefits of status. Like you have other ways to get what you need at the airport. But if all you have is an Amex Platinum in your wallet, then you've got kind of like one ticket to have a nice experience at the airport, and that's it. And so I think this is absolutely catered to the leisure traveler. I'm actually going to be in Vegas later this year for a speaking engagement, so I might have to add the Amex to my wallet before then, just so I can test this out. And fair warning, I think it's going to have to be a business expense, that annual fee. So we'll just have to figure that one out. But I can report back from
Try
Vegas
to get
later
that
this
baby
fall.
sponsored, Namaan. Let's
Yeah.
go. Let's go. Look, this conversation today has really been about a lot more than Amex. It's been about the business of credit cards, about customer targeting, and about what's happening right now in the macroeconomic space. So, if you enjoyed this as much as we did, and I had a lot of fun today, then please would you subscribe to the pod? We'd love to have you as a regular listener. We'd also always love to know if there's something particular that piques your interest, something that we say that you think is insightful or interesting that helps us continue to evolve as we build greater content and more connection with our listeners. So thanks again. Have a great weekend. Thanks, Naman. Enjoyed the convo.